Title of it may be a little misleading, but what we want to try and talk about is how a startup starts oftentimes long before the first investment, right? And what is that journey to get to the first investment, and how do you get ready for it? And what are those other funding opportunities in and along that way before you get there? And so that's how we're going to kind of lead this session today, all right? So I'd love for the panelists to go through and introduce themselves, kind of where you're based out of, tell us a little bit about the program you guys run, and we can go from there. Sound good?
Hi, everyone. You hear me okay? I'm Allison Eamon. I'm the CEO of Venture Atlanta, and I am here from Atlanta. First time I've ever been in Jackson, Mississippi. It's been a great visit. Venture Atlanta is one of the largest tech conferences actually on the East Coast, getting to the, in the country, one of the largest. We just had our 18th conference a few weeks ago, about 1,600 people. We usually get about 450 investors there. Emily's been there, John's been there, and it's a great event. So hope to see you all next year.
Hi, I'm Emily Weichel. I'm Regional Vice President for Generator. We're a startup accelerator platform and operate a number of funds around the country. I oversee our southern market, which includes Mississippi, Alabama, Georgia, and Tennessee, and I'm based in Birmingham, but I get to come to Mississippi a lot, so I've enjoyed getting to know all of y'all.
Hi, everyone. Good morning. My name is John Atkinson. I'm the CEO of the Idea Village. We are a startup accelerator located in New Orleans. We focus on companies from across Louisiana and increasingly across the Gulf South. We also, in the last few years, have built our own Venture Summit platform we call Third Coast Venture Summit, modeled in many ways after what Allison has done very successfully for many years in Atlanta. So I've been working in various roles in the venture ecosystem for many years, and am just incredibly excited about the trajectory across the Gulf South, and particularly what I've seen here in Mississippi over the last 5 or 6 years that I've been coming to this event. So.
Great. And my name is Nick Pashers. I'm the Center Director for Entrepreneurship and Outreach at Mississippi State University, and I'll be your host for the next hour. So let's get started with Allison. So Venture Atlanta has over $8 billion in capital raised for alumni companies. Could you share a successful story of a startup that came through and how it helped them scale and raise follow-on investment?
Sure. Well, we have almost 1,000 alumni companies, so we've had so many incredible success stories, but one of my favorite was a company called Car 360. So Car 360, was basically you put the iPhone around and it would take all the, pictures of your car and you could submit it for insurance or all different things. And the entrepreneur was just this great entrepreneur. He pitched at Venture Atlanta and did well, and he was raising money. The interesting thing was the first time he was at Venture Atlanta, he actually realized he was not the right person to be the CEO. So he actually found someone to be the CEO and then to help him raise his money. And I think that's a really important trait for someone to have. But where the story got fun was a year or two later, he had been an alumni, he was working on his company, building it, and we had Ernie Garcia, who's the CEO of Carvana, as our keynote speaker. And Bruno, I remember texting me going, please, can I come to the conference? And I was like, sold out. Mark Cuban was one of our keynotes, and Ernie Garcia. We had lines and people everywhere. And he was like, please, Allison, you have to let me. So I did. And he stood in the back during Ernie Garcia's talk, and Ernie Garcia got off stage, and he and his wife were waiting for him after he came out of the bathroom, stalking him. And basically, he pitched Ernie Garcia at the, right outside the bathroom, and Ernie Garcia ended up buying the company. So they literally had a full exit from making that phone call. And it's funny because they called me a week, after, and they're like, can we take you to lunch? I'm like, wow, lunch, I just got you, an exit here, good lunch. But there's so many other success stories like that, so.
That's awesome. Emily, you built a very strong presence with Generator across Alabama, programs in Huntsville, Birmingham, Mobile. Can you take a little second and talk about those programs, what they exactly offer, and then also can you share how Mississippi fits into your regional strategy and how our companies can take advantage of that going forward?
Yeah, and before we move to that, has anybody in the room been to Venture Atlanta? I'd be curious. Okay, so my advice that I always say to founders, to the founders that we take, is go in with a plan. So all of y'all should go next year to her conference and to his conference, but I think particularly Venture Atlanta, because they've been doing this so much longer, you got to go in with a plan, because otherwise it is super, super overwhelming. So a little bit on sort of our role in the South and what we're doing. Generator is actually headquartered in Madison, Wisconsin, and started in 2012 by two venture deal lawyers who realized that there was a lot of opportunity in the middle of the country, but that the traditional venture capital firms weren't seeing that opportunity. And what that meant for founders in places like Wisconsin and Nebraska and now the South is that they weren't getting the capital they needed to really grow their companies, and so it was a missed opportunity both for the founders themselves and for investors. And so now we started off with a sort of federal fund model is how I describe it. They raised a fund and operated accelerators around the country and used this central fund to invest in the companies that went through the accelerator programs. Because the ethos of our company is really focused on growing wealth and opportunity in the places that we all work and live, that didn't sort of jive after a while, because what would happen is these companies would get investment from our central fund, and then they would have an exit, and all of that wealth would go back to kind of our central LPs who are based primarily in Chicago and that part of the country. So what we've been focused on over the last several years is raising place-based funds in places like Mississippi and Alabama from local LPs, so that both the sort of financial upside from these startups stays in communities, but also the founders themselves can stay and live and build and work in places like Jackson and Starkville and communities here. So that's been kind of our ethos along the way. I think as a company, our investment accelerators are a part of a broader spectrum of programs that we provide. So we also have non-equity based programs called GBeta. And I think Alabama is a good illustration of that because we have kind of the full spectrum. So in Alabama, we operate actually 10 accelerator programs. We have G-Alpha, which is an early stage program that we operate primarily in partnership with universities for students who have entrepreneurship ideas. Our GBeta program is focused more on, you have a product, but you don't quite have any traction. You're thinking about your go-to-market strategy. And then our investment accelerator is really focused on companies that have some revenue and are ready to start thinking about their first raise. The thing that I think brings it sort of full circle with Mississippi, one example is a company called Home Tours Pro. I don't know, there's probably some folks in the audience that are familiar with them. So we connected with them at this conference 2 years ago now, and subsequently they went through our GBeta Gulf Coast Accelerator in Mobile and are now, doing well and doing their raise. And so I think that's an example of where opportunities don't kind of stop at state lines. Another example, I think, of a Mississippi company that shows how this ecosystem all works together. They're now called Moonbase. Is anybody familiar with Moonbase? Used to be, they had a company called Tempo that came out of Mississippi State and went through co-builders early on and is currently, with their newest idea, Moonbase, in our investment accelerator program in Birmingham. But still headquartered here, they have customers here. So I think that's just an example of sort of regional collaboration.
That's awesome. So, John, we've seen some great success stories, especially from Mississippi companies like Campus Not that have gone through your programs. So for Mississippi founders, how can programs like through NOE, from VillageX, serve as that next step beyond co-builders, beyond InvestMS, to help grow and get ready for additional capital?
So the Idea Village is over 25 years old now. We just celebrated our 25th anniversary. So we have been doing this venture building thing since really before it became a movement, before it became a national thing. But our history has been very deeply local. So we have very deep roots, very deep networks in New Orleans. We have very deep networks in Louisiana. And I am personally a huge believer in Brad Feld, who is one of the originators of this space. If you go back to his original literature, talks a lot about the idea of topophilia, which is a really weird word that means love of place. And he really saw love of place as kind of a raw material of startup building, because to do this successfully, you have to build a community of people that can support each other and help grow companies sort of from the bottom up. And as I look at the world, I think, and how we look at our growth in Louisiana and sort of across the Gulf South, You have to build out the highly localized infrastructure at each level to be able to do this successfully, because as companies get to a certain level, they can tap a resource from a wider geography, right? So if I were to send my earliest stage companies to Allison over here at Venture Atlanta, they would fall on their face because they are not ready for the Venture Atlanta stage. But if I can cultivate those companies and I can build them up and I can build the people around them to the point where they are now ready to present and can shine on that stage, it helps the whole ecosystem. So I think there is a lesson to be learned in that progression, and I think as we look at the Gulf South as a whole, we're all sort of trying to figure out how to do this. We share a lot of commonality in terms of culture, in terms of supporting each other, in terms of storytelling, in terms of how we communicate. And most importantly, I think our exposure to where the frontier of innovation is going in many of the places that have yet to be innovated, like energy and industrials and healthcare and these sort of more complex problem spaces that you see a lot of the folks in the room working on. And so we've been kind of very focused on how do we build that support at the localized level, how do we create a system that feeds folks up. Our model looks very similar to Generators in that we have an early stage program that focuses on language and tools. It's equipping people with the toolkit to go out and start something great. We have some mid-stage programs that are about how do you actually do your homework to figure out whether there's something here or not. And we have our later stage program in VillageX, which is our investment accelerator. And that is a highly selective program. We only take a handful of folks every year that are really ready to go to market. And Campus Nod has been a great example of that. Came out of the Mississippi ecosystem, was supported by a lot of folks in the room, came to us last year for VillageX. We were able to help them raise $1 million round, and including Tulane Ventures. They're a ed tech company that sells to universities, so having a university on the cap table is a huge validation metric. And so we're just really proud of that we feel like we've been able to collaborate across our two ecosystems to really help make this company successful.
That's great. I guess kind of building off of that, there are a lot of different options for founders looking for accelerator programs, right? We got 10 going on across your guys' ecosystem. John, you have quite a few. How does a founder identify or choose the right one for them, right? You have IndieBio, you have Hacks on the East Coast. How should somebody go about that and choose which one's best for them, if accelerator's even best for them?
Well, I can start and then y'all chime in. I always recommend that folks start with industry-specific programs where they're available. We operate a number of industry-specific programs in areas like health tech and ag tech. We now have a forestry program, life sciences, across the spectrum. And what I would say is there is a lot of value to agnostic programs as well, but I'll give the example of the health tech program we run in Birmingham. Instead of meeting with investors and sort of go-to-market folks across the strategy across the whole city, we're really focused on meeting with folks in the health system space and getting validation from them and meeting with customers who are focused there. So I think starting with industry specific is important. I also think the first thing that I always tell folks to do, at least for us, we have office hours links on our website for all of our programs, and a great place to start for the founders in the room is just going over, looking at those programs and selecting the programs that you have most interest with, and then just hopping on a Zoom with the person that runs that program. The things that we look for in founders, one of the first things I would say is coachability. So when you have those conversations, I just really recommend that you're open to the feedback that program manager provides. Particularly for the fund that we operate, we use our accelerators as a due diligence process, if you will. So we have 7 to 12 weeks with founders where we get to see, are they willing to pivot? Are they open to feedback? Are they interested in sort of growing at the scale and pace that we want them to? And so those relationships with our program team, we have 150 people across the country, are really, really kind of critical to the pathway that companies take with us. The other thing I would say in terms of advice for navigating the accelerator space, we have a lot of add-ons as part of our program and network. So we run conferences where we bring together startups and investors, and we also operate lightning rounds as a platform, which are one-on-one curated introductions between our alumni and investors in this space. And I think a lot of times, and I say this with total admiration, founders are like heads down trying to get things done, and going to a conference or participating in a series of Zoom meetings with investors feels like one more thing to do. But we have countless stories of where that has really translated to the kind of growth that they want to see. The example I always give is we have a company called Pretty Litter. Those of you who are cat owners may be familiar with them. It was technology that came out of University of Wisconsin. A graduate student had discovered this diagnostic tool that could figure out when cats had things like UTIs or other sort of illnesses. And so they put it together in a cat litter product so that you could sort of figure out from home if your cat had this disease. They went through our accelerator program, a non-investment based program. Later went through an investment accelerator, and then we sort of nagged them enough to come to a conference that we were doing in the CPG space. They only got one investor meeting, but it was with Mars, and 2 years later that converted to them getting acquired for $1 billion from the Mars Pet Care Group. So it's one of those things where I think if you're thinking about an accelerator, you have to think about it as what's the right one for me, and then how do I go all in on the sort of wraparound services and ongoing supports that come with those relationships.
I'll let John go.
Yeah. So I think accelerator programs are fundamentally about building your community and your network. And so I think one of the, when you think about, do I want to join this program, it is, do I want to join this community? Do I want to invest in this community? Do I want to build relationships with these people? And that can be the people that are running the program themselves, that can be the mentors in the network, that could be the broader community that gets created around these types of organizations through things like events. And so I don't necessarily subscribe to the idea that a company should go through one accelerator and then they're done with acceleration and it should be off to the races. Some of our most successful companies have gone through multiple programs. They've taken different things out of different programs. They've met different people along the way. They've helped build their own reputation through the sort of consistency of engagement with the ecosystem that then helps open other doors. And so, most people show up on across my desk saying, "I need money." That's sort of the gist of the headline here in this panel. I need money, and most of the time, the answer to that is not you need money. It's you need a business that can raise money. And here's what a business that can raise money looks like, and here are people that can help you create that and help keep you on that path. And here is a way for you to sort of build your network, build your reputation, build your community that's going to serve you over the course of the life of that business. And so I'm a huge believer in the power of acceleration. I think it is in our world, acceleration means a time-limited program with a group of peers that you go through an experience together. That peer group often is the most valuable long-term asset out of the program. And it is incumbent on folks, on founders that go through our program to make the most of that opportunity and to sort of get out what you put in. And so I think if you're ready to put it in, that's when you're ready to get into an accelerator program.
So my perspective is obviously, I'm 100% agree with Emily and John. I just want everyone to be clear that Ventureland is not an accelerator. So we are truly a tech conference, but working with folks like John and Emily has been pivotal to our success. So we work with, our market area is the whole Southeast, so it's really as far west as Texas, so it's kind of a big market area, up to Maryland and DC and Virginia, and down to Florida and over. So it's about 15 states. So we actually have open applications from May to August, and we will accept applications from founders in any of those states. And what's interesting for you all to look at, just like you're making a decision on incubators, it's what conferences you want to attend or what you want to apply to or where you want to put your time in. And I was meeting with a founder yesterday, and she had a great business, and I basically said, here's what I will share with you, is that it's free to apply to Venture Atlanta. It should take you 15 minutes to fill out the application. So it's high reward, low risk. So you've got to make those decisions when you look at the accelerators or anything that you're putting your time into. But for someone like me, the partnerships that we form with accelerators and groups, I will tell you all that 2 years ago I didn't know anyone in Mississippi. I didn't work with anyone in New Orleans or Alabama, and it's so wonderful to me that we now do. And we're expecting that to see tons of companies from Mississippi, Arkansas, Louisiana in the coming years. We want to support you all. It's a free opportunity to come to Venture Atlanta. So, I hope you'll look at it as an opportunity in the future. But I agree 100% on, getting in with the right accelerator. We've got some wonderful programs in Atlanta, but there's great ones all over the country. So I think, look at what's right for you.
Allison, following up on that.
Yep.
So can you walk us through how a Mississippi-based company should prepare in thinking about applying for your conference or another
Sure.
conference like it?
Yeah, absolutely.
And what makes it a valuable experience even if they don't get into pitch?
Absolutely. So again, our open applications start in May. You have to, on your application, we're just reading, data points. Emily's been on our committee. You got to tell a story. You have to, show why your problem is big, why it's a fundable company, why there's going to be investors that want to put money into that company, right? So you want to talk about your wins. If you have a great contract with the state of Mississippi, with the state of Arkansas, or with Microsoft or whatever, so you've got to present your company so that you stand out. So if you just we do this, what makes that exciting? Why did you build this company? What solution are you solving? And how big a market is this, right? Everyone is always like, and our company's going to go from $2 to 10 billion in 2 years. It's not, but we understand that. We know everyone wants to put in that big hockey stick, but we get about 600 plus applications. Sometimes more, sometimes less, just, depending on things. We pick about 80 companies. So y'all do the math. It's hard to get in, right? But we select 80 companies, and 40 of them are what we call our seed stage or pre-seed, showcase companies. So the companies that John was referring to that maybe not ready for the Venture Atlanta stage yet, we still want to get on the radar of our investors. So those showcase companies, as we call them, then become early stage companies on stage, and then become growth stage companies on stage. So we kind of have a pattern, but the opportunities you get, the marketing, the press, the attending the conference for free, you get 2 tickets, you get to go to an investor dinner. I had a nightmare yesterday about our investor dinner, so I know this is crazy, but I had a dream that it didn't go on, and something happened, and I woke up, and I had to remember where I was. It was really funny. I literally... It was crazy. I woke up and was startled. It was nuts. But anyway, just a really great opportunity. So for to your point as well, is work with Lindsay, work with Victor, work with with Innovate Mississippi, work with Generator, work with whoever can help coach you through that application. Making sure that before you do it, reach out to me. Allison Eman, LinkedIn Online. You can message me anytime. But we want to help you. We want to get those applications. Lindsay knows, I met her at John's conference, and I was literally like, oh, yay, someone from Mississippi. So, we truly want to help and support y'all.
And I guess to follow up on your earlier comment, I know we had an exit at Venture Atlanta while somebody was being stalked outside the bathroom and potential exit there. But what does it look like in general for a conference with investors and an accelerator program making introduction to investors? How does that relationship get built? What does a timeline look like to people actually putting money in? Is it in stage, somebody presents today and they'll put in money later that day? Or is it a 3, 6, 9 month deal? And how do you go about doing that to develop those relationships? I guess to all of you guys.
Yeah, I can start. I always tell folks, the first thing you want to ask somebody for is not money. So build those relationships sooner, before you're actually in the middle of a raise. As part of our accelerator program, everybody does investor swarms, which is where they do sort of one-on-one speed dating style meetings with 30 investors. And not everybody's thesis is going to line up with what you're building, but I think getting the reps in, getting your pitches done in front of those investors, and building relationships is kind of the baseline before you start actually working on your raise. I also think my boss always says, if you want money, ask for advice, and if you want advice, ask for money. People have probably heard that before, but I think it is so true. And so that sort of gets back to that coachability. Is like, if you want somebody to invest in your company, you need to be willing to ask their opinion and actually, act on it sometimes. The other thing I'll say, so we just, I was telling John at breakfast, we've just started a kind of pilot program that's meant to be post-accelerator and to help the companies that we've invested in through our fund in Alabama get to a Series A is really the idea, but we're helping them fundraise. And we just were in New York last week doing investor introductions with those companies, and the thing that I think separates them and why I'm really excited to kind of be their cheerleader on the sidelines and make these introductions is because when they were pitching to these investors, it was, you could see the excitement and the belief they had in the problem that they were going to solve. And both of the companies we were with last week are very scientifically complex, but they could explain what problem they were solving and how their solution worked in like 2 sentences. And I think that is so important. We do a lot in deep tech, and there are so many conversations I have with founders where I leave thinking like, I still have no idea what you're trying to build. So really, I think sharpening that is important for fundraising. And I will say, I've done a ton of fundraising myself, and to say a timeline is so tricky because our biggest LP, I got off of off the first conversation, and then I have folks that are very small potatoes in terms of what we're trying to close that I've been talking to for 3 years. So I think it just really runs the gamut, but is all based on sort of that personal relationship.
Awesome. Any founders in the room? Founders pitching here today? Keep your hand up. Anyone have a check from yesterday? Dirty secret of the industry. The checks in the audience is not how this works, right? It doesn't mean this process isn't incredibly valuable. So we were talking a little bit about this outside before the session. I've run a $750,000 pitch competition. I awarded a check on stage, but I don't expect that to lead to folks in the audience immediately writing checks to our companies. What I expect that to do is form an introduction for those folks to track that company over time. So one of the biggest mistakes that founders make, in my opinion, is starting that process too late. By the time you actually need the money, you should have started 6, 12, 18 months ago, building those relationships, getting your name out there, priming the pump for that investment round, so that by the time you actually open the round, you already have stacked up a bunch of interest. The best time to be fundraising is when you don't need the money. By the time you need the money, it's too late, and you don't have the right story to tell anymore. And so these events allow you to showcase your company when it is thriving, effectively, to get people interested, to get on their radar. For my investors in the room, if you think about your average time from when you meet someone to when you write a check, I would guess that is on average no less than 6 months. There is a reason for that. There's a strong psychology behind that. You as an investor, if you are going to reach in your own pocket to part with your own dollars, you want to be able to trust this person. You need to be, no matter how great the idea is, you want to be able to see that they can do what they say they're going to do, that they can put one foot in front of the other, that they can build the business. That takes time to build. So if you are not on their radar being tracked and building that image in their head, you're going to have a really hard time when you show up, no matter how amazing the company is, how great the traction, sort of all the great things that we talk about. So biggest piece of advice is to start early, build your exposure, build your brand, build your reputation. And by the time you actually need the money, it's sort of obvious to everyone why you need it. Right? That's the way to close a round. That's the way to sort of get the terrains aligned towards bigger fundraising.
Awesome.
Yeah, I mean, I'm sure you've all heard, I mean, for every 50 or 70 no's, there's one yes. So, you know, it takes a lot to get that answer, and I'm so glad John said that. I think a lot of times people think, I'm gonna sit at Venture Atlanta or at any of these events and have a check handed to you. It's just not the way things happen. I mean, obviously people have to do due diligence and look at things, but you know, what's interesting, one of our founders, I remember, told me that he got off stage at Venture Atlanta, I think it was 2 years ago, and an investor came up to him and he said, okay, I'm ready to give you money. So they had talked for years. He had seen him, he had been building those relationships, and it was like something finally clicked in that investor. And I was like, oh, well, that's a great story. I love that, you know, so a lot of those things happen. But, you know, when we promote Venture Atlanta, we say we're looking for companies that are raising money in the next 12 to 18 months. And again, to John's point, you know, sometimes founders would go, well, what if I'm not raising money in October of 2026? That should never matter. If you raise money, you're always gonna need money, right? If you raised your Series A, at some point you're gonna need your B, and some point you're gonna need a bigger round, depending on how things are progressing. So you really should never be like, well, I don't know if that exact time. You want to build those relationships, and it takes a lot, right? So, you know, you want to have that face-to-face, but then you want to follow up with the Zoom calls, and you want to see, you know, who they know. And I think you also want to make sure that you enter into a relationship with the right person, right? So the founder I was talking to yesterday, she was telling me that she got $50,000 of an angel investment, and I said, and you know, what besides the money, what else are they going to help you with? You know, are they on the board of something that makes sense, that's going to help progress your company forward? So make sure you take the right money too, and have the right partnerships.
Can I just say one thing to the investors in the room? I think there are some investors in the room, and I've been trying to practice this myself. I think no is a great answer too. And the thing, I've seen this with founders that we're trying to help raise, and I've seen that with our own funds. We get strung along by folks often, and when the investor knows that this is not going anywhere, I think it's such a gift to say no to somebody sooner rather than later. I always appreciate getting a no, honestly.
Yeah.
Although, wait, can I tell a really funny story? We had a founder who, when she would get a no, would send an orchid to the investor with a note that said, I'm sorry for your loss, which I thought was so hilarious.
All right, that's great. I guess, you know, we've talked about some events. Venture Atlanta, wonderful opportunity to meet new investors. Accelerator programs, wonderful opportunity to meet investors. Our Accelerate conference here, wonderful opportunity to meet investors, meet co-founders. You know, Accelerate has several different partners across the state, and we all have pitch events, also great opportunities to meet investors. When we talk about expanding out individual reaches for those founders who are trying to look for funding, trying to look for other founders or their first employee, I guess going back to kind of what New Orleans has, since it's about equal distance from Atlanta too. Can you talk a little bit about your programs on Third Coast, New Orleans Entrepreneurship Week? How can Mississippi founders leverage also those programs there to expand out their network and to be, you know, help build their company there?
Yeah, so I think the more places that you're showing up, the more you're building that reputation, right? And I think one of the things that Allison said that is really important, that person you already know that sees you on stage at a particular thing that makes them click and go, oh my God, look how far this person has come. Look at all these great things they're doing. I already know them, I already trust them. Now it's time to write a check. That's really important. That's actually probably more the standard or most likely behavior of all of these events. And so one thing I was thinking about while she was talking was, if you are pitching somewhere, invite people you already know to that pitch who might be likely investors. That is in many ways your best audience and can be really valuable. And to Nick's question, how do you build that network? I think when you are showing up in multiple places and people see you across multiple events, you come to New Orleans Entrepreneur Week, you come to Third Coast Venture Summit, you come to Venture Atlanta, we're now building this broader network across all of these events where we're seeing each other on a regular basis. We're building trust, we're building camaraderie, we're keeping in touch with these with each other's businesses. We have you have other founders and other stakeholders in the ecosystem who can speak to what you are doing, right? That's how you build a reputation in front of yourself. That all builds towards making it easier when it comes time to fundraise. And so in the South, we are more geographically spread out than in some other parts of the country, especially parts of the country that might be good at these types of things that we're talking about here. The way that we hack that geographic sort of extended footprint is that we hack density through things like events. And so it's one of the reasons you will see more of these types of events here than you will in other parts of the country, is because this is the way that we overcome our sort of physical distance in terms of locations. And startups thrive in density. All of what we do is about creating density of startups, so that you are connecting with other founders, you're connecting with potential talent, you're connecting with potential customers, you're connecting with capital. That rich environment around you is what helps startups thrive. And so we look at that as kind of our job as ecosystem builders, is to build up that environment around founders, so that each company that gets started is more likely to succeed.
So when comparing the multiple opportunities, we're talking about prize pitch competitions, non-dilutive, grant opportunities sometimes, conferences to do one-on-one partnering. There's a lot going on, and founders are generally very busy. So what does that decision matrix look like? When should people start hopping into these different things? When should they start presenting their idea? When is it too early, or when is it just better to target one section or another? Any of you guys?
I think in terms of, I'll speak to the accelerator side when folks are ready. So I think we've all kind of described, well, not all of us because you don't have an accelerator, but John and I think the thing that has really grown up over the last several years in our region is this sort of pathway of accelerator options. So there's really something for you at any stage. I do think, and this may be a little different from what you were saying about fundraise early, a lot of the founders I've worked with, it's really hard to be 100% focused on fundraising and 100% focused on building the business. And one of the gifts that an accelerator gives you is the sort of focus and partnership of both the program manager and the other companies in your cohort to do all of those things. So rather than having to tee up your own investor meetings, the accelerator program is doing it for you. Rather than having to identify potential mentors and customers, the accelerator program is doing it for you. So if you're at a place where you are ready to sort of go all in on all of those domains, I think an accelerator is right for you. Where I feel like I've seen founders fall down when they've tried to participate in an accelerator is when they are, like for our investment accelerator, often people will come in and they are 100% focused on fundraising, and the sort of building the business part starts to lag, and that you just really miss a lot of opportunities for support from a program team and a mentorship network if all you're doing is sort of going on the road doing fundraising meetings. So that's the accelerator standpoint. I don't know if you want to talk more.
Yeah, I think, it's funny. There's a founder, and she's fantastic at pitching and wins all the time. But part of me is like, why does she go to every single pitch competition? Like, you don't necessarily need to go to every single one, but then on the flip side, I'm going to contradict myself. It's okay to let that money add up, to get that $50,000 or 15 or 20 or whatever the case may be. I mean, again, if it's helping you with partnerships, if it's helping you find the right customers, if it's helping you find, future talent or whatever. But I think you also need to look at, do you have the right co-founder? Do you have the right team? Do you have the right people around you? Because sometimes the person that comes up with the business is not the person who should be fundraising, is not the person who should be, on the road. And another, sometimes it seems like the bad word, but at Venture Atlanta, we're a nonprofit. One of our biggest supporters are bankers and lawyers and accountants. They're incredible partners. They're going to make introductions for you and connections and take you to the right people. So I feel like sometimes founders may feel like they're on an island by themselves. You're not. Find the right people on your team, find the right partners, to work with, and make sure it's the right opportunity for you. I mean, sometimes venture in land is not the right time. You also have to look at, is venture capital the right thing? Am I going to just bootstrap? Am I going to look at just getting an angel partner? Maybe I just need $200,000 or whatever. So just make sure you're getting the right advice and you know what you need. You know, sometimes people are like, oh great, I got $2 million. And I heard a story, it was really recently, where someone had raised a bunch of money and the money was just sitting in the bank, and the venture fund was like, what are you doing with that money? Why aren't you having it work for you? And they were like, I'm just having it sit there. And the venture fund was like, no, that's not what I want you to do. So, you know, just make sure you're making smart decisions.
So our job is fundamentally to push you to think bigger and to build your network, right? And so if you're not ready for those two things, an accelerator might not be, or sort of plugging into any of these events might not be the right thing for you. And so from my perspective, it's never too early to start learning the language and tools. It's never too early to start building your network. But if you are so set in what you, like I like to use the example of, you know, Steve Jobs was notoriously like notoriously indexed to the Henry Ford quote of like, if people wanted if I'd asked people what they wanted, they would have told me a faster horse. I don't think Henry Ford actually said that, but it's attributed to him. And he knew better, and he was going to build that product because he had a vision for that product, and no one could change his mind. That type of person would not thrive in an accelerator environment, right? Our job is to pressure test your assumptions. It's to put a bunch of people around you who are going to poke holes in the idea. It's to help extend your network in service of building something bigger. And so if that is not your motivation, it is probably not the time to plug into that thing. And so, you know, what I tell folks going in is this is an opportunity to sort of go in with an open mind and to come out with something that is probably bigger than you could have conceived at the beginning.
We have a few minutes left, but I want to give an audience an opportunity to ask questions. If not, I have many more. So does any of the founders in the room have any questions? Not? Okay. Yeah, please.
Hi, my name is Krista Richards, and I wear two hats. I'm director of research for Innovate Mississippi, and so labor force development in the state is something that we are working very hard on. But I also am the founder of Wealth Shape, a financial empowerment firm, and very fortunate to be coached by a Fortune 500 CEO. That said, I'm self-funded and am in proven early traction. And so one question that I have for you is, when is that early indicator or signal that it's time to shift from self-funded stability to venture-backed scale?
So venture investment, the venture world is a very particular game. So what I believe everyone needs to understand when they think about taking outside venture investment is that you are making an explicit commitment the day that you sign that paperwork to sell that business. And so if you're not going in with that mindset, it's probably not the time to consider venture investment. There are some people working around the margins of other models for how to fund companies through equity without relying on a sale to get investors' money out at the end. But that is definitely not the norm. Most investment, and particularly in the states that we're talking about here, there are two Fortune 500 publicly traded companies in Louisiana. They're both utilities. If we had an IPO, amazing, we're going to celebrate that, but that is a unicorn on a unicorn of an outcome. We are building businesses for sale. And so to build a business for sale, you have to go in with that mindset. You also have to have a replicable process, and you have to have underlying economics that support that replicable process. And so I would look through your operation through that lens and say, do I believe I have a replicable process that I can, you know, take investor money and really sort of pour gas on the fire? And am I building this business for sale in the next 5 to 7 years?
And just one thing to add on that, I think in addition to thinking, am I building this to sell, it's, am I building this with the idea to grow at a venture backable rate? And so it varies a little for us by industry, but like we have metrics around monthly growth rates that we expect for our companies, and there's a whole lot of people who just aren't comfortable with that pace. And so I think that's another important consideration as well. It sort of gets to your hockey stick thing, right? Like, is that something, and we've seen a lot of this sort of movement back and forth between product and service. If you're focused more on the service side, I mean, I don't know that you are specifically, but for founders in the room, if you're focused more on the service side, that gets really, really hard to make that math work in a venture space. And so I think that's a good sort of lens to go through as well. If you're looking at turning your service into a product, that's a different thing. But those are just a couple other considerations.
No, I think those are good.
We had another question over there. Yes.
When can you apply for one of the John Atkinson's program? I know about Generator. I've applied several programs for you guys, but I was wondering about John.
I guess all of you guys could take a turn of when maybe those application deadlines are coming up and when we could take advantage of those.
Yeah, so we run a year-round recruiting process where you can go to our website, ideavillage.org. Org is important. Ideavillage.com is not us. Ideavillage.org, and you can fill out a founder profile. That is the first step in our process. And that founder profile is used across all of our programs. So the next program for us will be in the spring. So the next intake process will be for Idea Institute in the spring. That program will start in April. We actually just closed applications about a week ago for our later stage program, which is typically the beginning of November every year.
And it sounds like you've checked out Generator programs. We run accelerators in 46 cities around the country, and despite my best efforts, none of them are on the same timeline. So I would just say, if you're interested in those programs, to check out our website for when their application windows are.
So ours, like John, is ventureatlanta.org. So we also are super active on social media. So follow us on any of them. We're on LinkedIn, X, Threads, everything. My marketing team does a great job with that. But a lot of times I didn't know about your applications. Well, they're open from typically the beginning of May until the beginning of August. So it's usually about May, June, July, about 3 months. And then we select companies in late August, early September, and our conference is usually the middle of October. We actually haven't announced our 2026 date yet, but it's probably going to be the middle of October next year. So we typically just have the one time for the applications. So, just make sure it's on your radar.
And as for the Innovate Mississippi partners that we have throughout the state, so those applications like Startup Summit, which is held April 10th this year, those applications will open up in about 6 weeks. But then we have partners across the state that are going to have their applications open up probably sometime at the beginning of the year. And those will go from anywhere between March through probably the end of June for those pitch competitions as well. So they're easily accessible across the entire state here. Any other questions? Yes.
Emily, can you expand on the range of growth rates on your monthly growth rate expectations?
So I would not want to do that because I'm not specifically familiar with that in every industry, but I can compile it and send it out as maybe Lindsay could help me with sending that out as a follow-up. Ours is really, so for example, I said we're launching this forestry accelerator. We don't even have those growth rates defined yet. So it really just sort of varies across the spectrum. Life science is one of the slower ones. It just sort of depends industry to industry. Do you guys?
Yeah, so I'll give a general reference point. So if you're building a SaaS business, most professional investors will not start engaging with you until you have $100,000 a month in recurring revenue. So that is something we sort of back into, right? Is how do we get you to $100,000 a month in recurring revenue in a somewhere between 6 and 18 month timeline?
Great.
Yeah, the companies that just so you all know, the companies that we're looking at are really in 3 different buckets. Like I said, we have our pre-seed, seed stage, companies, and then we have our early stage and our growth stage. And the companies that we're looking for on stage, I mean, they're typically raising $2 to $5 million in that early stage range, and $5 million to 50, in that growth stage range. They're definitely, a lot of them pretty sizable companies. We do look at pre-revenue companies. What we don't look at is, I have an idea. You have to have a product. You can't just be, we're going to be launching in the next 6 months. Those are not the right companies for Venture Atlanta.
We had another question. Yes, sir.
Somebody mentioned how founders and VCs need to have a good symbiotic relationship. I was wondering if y'all could tell us, as founders, some red flags to look for when you're speaking to VCs.
Next session. It's a good topic. I think we could go all day on that. Something that gets bandied around a lot that I think is an interesting way to think about it is, oftentimes you're more committed to your investors than you are to your spouse. It's easier to get out of a marriage than it is to get out of an investment partnership. So think about that. Date before you get married, right?
And that goes both ways.
That goes both ways, right? The 6-month process that I talked about earlier, where investors are getting comfortable with the founders, also works the other way, and in many ways works in the founder's favor to get to know the investors that are most aligned with where they are going. I also think it's part of why it is really, really critically important to have the exit conversations up front. I built a group called Lagniappe Angels, which was one of the first angel funds out of New Orleans, and one of our members used to he would stop people in the middle of the pitch 3 minutes in and be like, what's the exit strategy? And he would just hound them on the exit strategy until, in somewhat uncomfortable and inappropriate ways, until they could come up with an answer. And what he was looking for was not necessarily that they had mapped who was going to buy them or how or why. It was that they had internalized that they were going to exit, that their goal was exit, that they were going to sort of relentlessly pursue a path to exit. And if I were a founder in the front of that room, I'd be thinking about whether I wanted that person on my cap table, right? And there are some people where that was really helpful, and it helped them clarify their thinking. And he's a great person and would be a good long-term partner for that type of founder. There were others who were like, "Wow, I've never really thought about this. I want to run this business forever." Not a fit, right? And so I think the money's all green, but it's attached to personalities. And so pick the personalities that you want to work with.
I don't know if this is a red flag so much, but I kind of believe that entrepreneurs are born and not made, which means maybe I shouldn't work for an accelerator. But I am not an entrepreneur, but I sure love standing next to them and working alongside them. And I'm grateful to all of you in the room who are founders who are doing what I think is the bravest calling and the thing that is driving our economy to build these companies. To me, it just often feels like I watched my kid for the first time hit a three-pointer. I could never hit a three-pointer, but I sure loved watching her do it. And that's how it feels to sort of be cheering on founders who are doing something that you know is possible, but you couldn't do it yourself. I say all that because I think sometimes you meet a founder who is not in it for the love of entrepreneurship and the sort of that innate need to sort of build, but they're in it for the money or for the social media. You can sort of tell if they're just the love of entrepreneurship is there. And to me, that's the ultimate green flag. And those are the people that we love to back and support. And that's saying that as somebody who doesn't have that in them. So to me, that's one of the major things I look for.
I would say also do your homework. So it's okay for you to look at who they've backed and reach out to their portfolio companies, see how it is to work with them. There are hundreds and hundreds and hundreds of investors. There are some that are absolutely probably not the right ones for you, but I would talk to who are they, working with, and what kind of experience have they had? I mean, again, just like John said, interview them. I mean, you're not going to just go marry someone. You're going to go, date them for a little while and make sure they're the right person. But I think do the same thing. But my concern a lot of times is an entrepreneur, maybe an inexperienced one, is like, hey, this guy's ready to give me $5 million. I'm just going to take it. Well, do you know what the terms are? Do you know what that really is going to mean for you? You can't just jump.
One more thing there. So I would be very wary if I were a founder of any investor that wants to fund a predominant portion of the round. So if you're raising $800,000 and that investor says they want to cut you an $800,000 check, that sounds like a private equity deal. They're going to have opinions about your business, right? And so know that going in, if you sign up for that, that's what you're signing up for. Diversification of the cap table helps everybody, in my view, as it helps the investors get comfortable. It helps investors write checks faster. I think a lot of people make a mistake of asking each investor they meet for too much money. Ask for the amount of money that they can afford to lose. You'll have a much better long-term relationship, right? If this is a rounding error to them, then they're going to be able to help you in the right ways, right? If this is half their 401k, it's going to get weird, right? So I would think about that. That puts the onus on you as the founder to build out that network, right? You're going to need 20 people to say yes to close that round, not 2. So the more that you can do in that regard, the more you can sort of set yourself up for success.
Great. Well, with that, I think we're at time. So if you guys have any follow-up questions, I'm sure they'll be around today. And otherwise, thank you very much for attending. Thank you very much for sitting on the panel. Enjoy the rest of the conference.